Hey everybody, it is good to be here this morning. You got me without Kevin. Normally on Wednesdays it's Kevin and myself, but Kevin's out today, so I'm glad to be joined with Barb Armstrong, who's in the chat helping me out. I appreciate Barb. And hey, I'm glad you're here too. We'll get rolling into the markets here in just one sec. Let me just remind you, you can follow Barb or myself on X at Brentmore CS, at Barb Armstrong CS. And the information we're going to go through today is for general informational purposes only. Should not be considered an individual recommendation or personalized investment advice. And, we'll look at individual stock symbols here today. Those are not recommendations. I think you guys know that at this point. The paper money software application, which is what we will be using, is provided for educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. Past performance is no guarantee of future results. All investing involves risks, including loss of principal. And there we go. What are we going to do? We're going to look at the general trend of major market indices. So we're going to follow the same pattern we typically do in this webcast. And we'll look at individual sectors, look at stocks that are in the news or probably going to be in the news because of earnings, perhaps. We'll focus on technical analysis, but just realize technical analysis is not the sole means of investment research. And there we go. Let's head on over. Here's the Thinkorswim desktop software. I have the S&P 500 up, and markets just kicked off down just a smidge here. When we're looking at the markets, working the S&P 500, we've definitely seen some weakening. Uh, Not super weak, but if we were to look at from a technical standpoint, I'd kind of say that's the pattern we have right now. And so I think for a lot of technical traders, their approach may be looking for either a breakout to the upside or a breakout to the downside on this. And inevitably, that will happen before too long because these lines are converging here. So I don't know where it's going to be. I don't know what's going to drive it, whether it's news driven. We are in earnings season. So that certainly can affect things, and we have some bigger names coming out with earnings, including later today, Alphabet and Tesla. So, that can certainly move things here in the markets right there. So that's the S&P 500 kind of going, sideways right now. If we change the time frame to, we'll look at this morning, you can see how we opened up. This is yesterday's trading right here. Here is this morning's trading. So we opened up lower, but so far we're recovering a little bit this morning here. So we'll see if that continues. If you wanted to, you could always do something like put on pivot points and use these as potential levels of support and resistance. Here's your pivot point right there. Let me just get rid of, those are my other trend lines. Let me clear my drawing set so those don't confuse us here on that. But we're lingering right around that pivot point. For those of you who aren't familiar with pivot points, it's a study you can use. It's available on the Thinkorswim desktop software. You just go up to the flask and add pivot points. Typically used on intraday charts, and they can be used for potential support or resistance levels. Right now, we're right at that purple line. This is what we'd call the R1 line, resistance 1, R2 line, resistance 2, S1, support 1, support 2, and so on. So that's if you're looking intraday. No need, you don't have to, but just as we look a little bit closer. But you do see a big difference when you look at the S&P 500 versus the NASDAQ. Here's the NASDAQ. Now, look at what the trend has been on the NASDAQ. The NASDAQ has been doing this, okay? This has been this is probably, I would say, kind of a key support level here on the NASDAQ. But there's a difference in the patterns. Um, there's a difference in the patterns. And that is on the S&P 500, the we were getting higher lows. This is actually more of a like of a descending type triangle pattern. And in this case, it is a matter of uh, kind of it's generally thought to be more of a bearish pattern. Okay, well, we'll see. If it breaks out to the high side, that'd be a good positive break on it. If it breaks out to the low side, not so much. But you can see the weakening in the NASDAQ. And so what this really reflects is this. It really reflects just a change in the market. Now, yesterday we had a nice day. A lot of that came from like semiconductors, which had a great day yesterday, but it had a great day after a big sell-off. If we go to, say, the S&P 500 equal weight, here's the SPXEW. So we're stripping out of the mega caps and we're weighting all these stocks in the S&P 500 equally. Because remember, if we go over here and we look at the Visualize tab and we look at the S&P 500, when you're looking at this, this is the S&P 500 and the area on the graph represents how big of each individual stock is and how big each sector is. So here's the IT sector, and here's we'll call it the real estate apportioned to IT. Here's the real estate apportioned to communication services. Okay. Financials. Well, if we look at the total graph, the total chart here, that's over half of the chart in those three sectors. There's 11 sectors total. Look how much space materials is. It's that right there, okay? Real estate is that right there. Utilities, that right there. So when we do the S&P 500 equal weight, it doesn't mean every sector is weighted equally. But when you look at companies like NVIDIA, huge company, Alphabet, okay, Apple, those are given equal weight as ADP. There's a lot of these, like, it's too small to even put the symbol on, okay? We're giving each of those equal weight. So lately, what we've seen in the NASDAQ is we've seen a lot of these today, we've seen a lot of green, but more or less like over the past few weeks, we've seen a lot more red here and a lot more green over here. And that's why we're starting to see that. That's why we're starting to see the difference here in the graph here between the SPX EW, where we have this situation going, where we have this nice trend. This is a 20-day moving average, by the way, which more or less, it's kind of been dipping a little bit below it, but the general trend has been strong. So it just shows what the market has been doing. We'll see if that changes here coming up, but I think that's the overall market right now. Now, having said that, when we look at something like the VIX, so here's implied volatilities on the market, despite market headlines and concerns and trouble, if I go to like a 3-year on the VIX, this white line represents basically where we are right now. You can see, in the grand scheme of things, admittedly, there's been some troubles over the past few years. Implied volatility on the S&P 500 isn't that high. Okay, the market's kind of taking it in stride. It's like, hey, I'm used to things like war here at this point. I'm used to concerns about inflation or this or that. So implied volatilities aren't that high on that. Now, that doesn't mean implied volatilities on individual stocks are that low. So here's the VIX EQ, which is looking at the average implied volatility for the individual companies in the S&P 500. Notice that has been going up. That is up around 50. Not, what was the VIX? 17, 18? So You understand the difference there on the for the index as a whole, you have stocks that are going way up on a given day and other stocks that are going down on a given day. And the actual effect is for the index as a whole, the index doesn't move as much. So that's why the VIX isn't that high. But on this, it's saying, hey, one's going up a lot, one's going down a lot, and um, it's looking at those individually and saying those individual stocks are moving a whole bunch there. So that's what we're seeing. So individual companies, you will see those the higher implied volatilities there. Now, what's driving that? Obviously, oil's driving that right now to a large extent. Let's look at crude oil. Okay, here's crude oil. Well, resumption of the war, right? 11 straight days of strikes against Iran for the US. Um, and any end in sight? I don't know any more than you do about it, but not it doesn't seem like it. And so oil prices, the Strait of Hormuz is effectively closed right now. I don't know that that's going to change. The Evidently the Houthis are more going to be more involved is kind of the news stories. That wouldn't help the situation. So oil prices is going up, and you've probably seen it at the pump there. This is crude oil. Here's the refined product. Okay, here's gasoline futures. It's been going up as well. That affects everything. That affects, and you can look at like heating oil. Why do we look at heating oil? Well, it's not just heating oil. Heating oil we use as kind of this proxy for things like jet fuel. Okay. Well, it's been going up. Is that going to affect airlines? Yeah, you bet that's going to affect airlines or travel. It's going to affect the, uh, the average household out there. Here's the gasoline futures as well. Average household is going to affect shipping, affect all company, affects every sector in the economy. Maybe beneficial to energy, but I can't think of any other sector that's really going to be beneficial to. Um, so that's what we're seeing right now in terms of oil. But one thing it does certainly can affect is the prospect of inflation. Okay. Well, how does inflation affect things? Well, one way that inflation affects things is it affects interest rates. Okay. What have we seen? Well, we've seen interest rates creep higher. This is, there's, I guess, pros and cons to interest rates going up, but in general, it kind of wears on the economy. If you think about interest rates, okay, so this is the 10-year yield, okay, multiplied by 10. So move the decimal point over one spot, 4.6%. Um, if you think about what drives inflation in interest rates is what's the demand for the 10-year bond, okay? If there's more demand for the 10-year bond, the 10-year bond goes up in price and the interest rate, the yield goes down. Well, that's not what we're seeing. We're seeing demand for the bond go down. And therefore, yields go up. Well, why would demand for the bond for the 10-year note go down? Well, think about one aspect is possibly inflation. Are people more likely to buy fixed income, something with a fixed income interest rate, if inflation is going to go higher? No, because you're locking in this nice interest payment, but it's not looking so nice if inflation goes higher because it diminishes the value of it. So that can lower demand of that. The other thing that can lower demand for the bond is just overall uh, overall economic forecasts, I guess, would be something there as well. And um, So in any case, that's, inflation is kind of a big thing, and it brings us up, and what is with higher interest rates, how does that affect companies? Well, one thing, it makes companies borrowing, cost of borrowing go up. It costs more to borrow. That's not good for most companies. Additionally, um, it's it also, when you're valuing a company, the higher the interest rate, the more we have to discount the current value, the future cash flows of that company. So valuations of the company tend to go down on that too. So I don't want to get into the weeds on that, but that's inflation can be harmful on that. So what's the Fed stance on this? Well, here's the Fed stance on this. This is the CME Fed Watch tool. This is a third party. This is the CME from the CME group. It's not a Schwab, and it's not a product. It's also not a guarantee of what's going to happen. But right now, if you look at this, this is looking at Fed futures, Fed fund futures, and saying what do traders in Fed fund futures expect about the future of interest rates? The current rate is right here. This is for the July, it's kind of right at the top, July 29th meeting. The expectation is for the July 29th meeting, and this is just an estimate, I guess. This is no guarantee of what's going to happen, but more than likely, the traders feel that interest rates are going to stay the same, okay, through this July meeting, okay? Well, what if we change that? What if we go out to September, where you can see that change? More than likely in September, the Fed's will at that point have raised rates, according to this tool at least. By the end of the year, the odds of the rates staying the same are pretty slim. Odds of a single basis point increase is, significant, but really the odds of a 50 point or more increase is over 50%, or that's what, roughly 50%, we'll say on that. So that's that is one possible scenario for the future of interest rates. Now, keep in mind, just because the Fed adjusts the Fed futures rate, it doesn't necessarily affect directly the 10-year yield, but because it's more forward looking. This is more forward looking. So if this expects the 10-year, the Fed funds future to go up, this is going to tend to precede that move up. And I think that's part of what we're seeing right now in that. Now, of course, let's move on from this because that's probably enough of that. But let's look at some other aspects of the economy that you're probably of interest in. We're looking at futures here. We're not talking about trading futures. We're just talking about futures as prices. Price of gold has been going down. Little rally the last couple days. To me, that's not a meaningful change yet. Maybe if we start to break above the prior high, maybe it's starting to gather my interest if we're starting to break above the prior high. Just going above the 20-day probably isn't enough. There's always the question for traders. When does a trend change? Whether you're in an uptrend looking at a downtrend or a downtrend looking for an uptrend, when does a trend change? Because there's always noise in it, right? You always have rallies, little bear flags, so to speak. Is this a bear flag or is this a rally? Well, one of the first key things that we look for is the first signs, not a definitive sign, but the first signs is you break to a higher high, okay, on that. So we'll see if that happens. And then we'd be looking for a higher low. And then you can start to look for things like, hey, maybe that trend is changing from a downtrend to an uptrend on that. Okay, so that's gold. Silver, I'm just going to kind of quickly look at silver because I think it looks pretty similar, doesn't it? Downtrend, break higher the last couple days. How meaningful is that? I don't know. Here's copper. Copper looks very different. It's not a precious metal. as much as an industrial metal. So it reflects more economic expectations, I guess I would say, which maybe that's a good sign because some traders will look at this price, the price on copper, and say, "Hey, if the expectation for demand, economic demand for copper is low, then you're going to see copper going down." And tends to be a little bit more forward looking here on this. So that's what we're seeing on that. Now, there's other asset classes that may be of interest to you. Let's look at, if I can type properly, here's Bitcoin, okay? Let me just mention this here for Bitcoin. Digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have, okay? Consider it a more speculative investment. Now, we're not talking about actually buying Bitcoin futures here. I'm just talking about the price of it, but I needed to say that. We've seen a little rally off of its lows. We were down below $60,000 per Bitcoin. We're now up to the 65,000. Is this rally going to continue? I don't know. I guess from a technical standpoint, I'd probably look at this level as kind of an important level where we had this, because then if we're breaking above that, we're breaking another, well, possible high. I mean, was this, we kind of had this. We broke through that. That's good. We'll call that kind of an area here, okay? We broke through that area. It struggled with it a little bit. So we had a low. We had a higher low. So reversal of trend? Maybe. This is like, when we were looking at gold was like right here in that process. We'd have to, we're waiting for it to see a little bit more. Well, maybe we're starting to see a little more. This kind of is converging, by the way, with this resistance, if you will. It's kind of converging with our 50-day moving average on that. So something to maybe keep an eye on if that is of interest to you. Now, something that's going to drive the markets is, well, you'd expect earnings. Well, here's earnings calendar. Now, I've limited this just to the S&P 100, by the way, okay? Just to declutter the graph a little bit, or the chart a little bit more. The table, I guess, is what you call this. So S&P 100. If you ever want to do that, by the way, you can go up to the gear and then change whatever. You can look at your own stocks, by the way, right? You can look at your current account positions, pull that up, and get your earnings calendar, your own personal earnings calendar on this. Right now, I have the S&P 100 there, okay? And so today's the 22nd. So we had a couple, over the past few days, we've had some that, just are maybe of interest. We had 3M come out. We had General Motors come out yesterday, okay? 3M and General Motors yesterday. Let's go, and here's 3M. It came out yesterday morning, so you saw the reaction in yesterday's trading. Nice gap up on 3M, okay? Break above a potential previous level, continuing that momentum. For some traders, let's say you were a trader and you wanted to participate and jump in on this trade, or do a trade. It's not a recommendation or anything. What do? You go like, hey, this has already moved up so much, I'm worried I'm in too late. Well, here's a couple things. One, if you jump in now, you could do it, but you could also put in a tighter stop. Now, stops don't guarantee you're going to get out where the stop price is, but you could put your stop right below here, which is presumably maybe the gap, presumably a new support level on this. All right? New support level on that. You could even go tighter on the stop. You could do a trailing stop, if you will, if you want, and try and ride this momentum up. Now, if you do a trailing stop that's pretty tight, it's going to get you out pretty quick as soon as it turns down. Again, that doesn't guarantee getting you out fairly quickly doesn't necessarily mean it's going to get you out at the price you want, because the stock could gap down, right? And gap way down and get you out at a much lower price. But the point is, it is possible that you could still get in while the momentum's up. But I think a lot of traders would put a fairly aggressive support stop level if that were the case. Another thing that you could do if you're a bullish trader on this is wait, see if we pull back and retest this and bounce. And if it starts to bounce, that's another area where some traders would consider entering a trade on that. The other kind of one I wanted to look at that came out yesterday that had a significant move was General Motors. Hey, same. Potential resistance up here maybe. Right now, I mean, so far today though, it's continuing up pretty strong, up 5% today already. That's great for General Motors. Nice strong move. Probably pretty significant resistance there on that. Let's go back to our earnings calendar though and see what's coming up. I already kind of mentioned that today's the 22nd. Today's the 22nd. After market close today, we have Alphabet. Okay, you see it's listed twice. It's just the two different classes of shares. The price on those are going to move the same basically. Alphabet coming up after earnings. IBM coming up after earnings. ServiceNow. Tesla. Now let's look, and keep in mind, if you are, let's say you're looking at Alphabet and you love the stock or don't love the stock, or you're planning on doing a trade and you're doing technical analysis on it. Whatever technical analysis you do is likely to shift when earnings comes out, because it's just this unknown event. It may be very good, it may be very bad. If we're going to break through, say, a support level, earnings is a time when that can possibly happen. Now, how big of a move is likely on Alphabet here? Well, one way to do it, to check, is you can go over here, go to the trade tab, and you can look right here. You see this little yellowish symbol, MMM, okay? MMM. And so it's saying plus or minus 14, we'll say 14 and a half bucks. So what that's saying is, how do you interpret that? What that's saying is current price is 348. I'm kind of rounding here a little bit, okay? It said plus or minus 14 and a half bucks. For ease of math purposes, I'm just going to say 15 bucks here on this, okay? Realize I'm taking some liberty with the math here on this. What that is saying is, what the market makers are pricing in is, let's see, 348, 358, 363, or subtract $15 from that is going to be 333, okay? 333. It's saying that there's basically a 68% chance, okay, one standard deviation, that after this earnings event, the stock is going to be within this range, okay, within this range here. But that also means there's roughly an 18% chance that it's going to be outside of that range. Am I doing my math right on that? No, 16% chance that it's going to be outside that range. All right. So that's how you can kind of interpret these results. Now, we just did that for Alphabet. Here's IBM. IBM's coming out with earnings tonight. And so kind of calm before the storm, not moving much today right now. And, this, aside from, let's, again, it can change on earnings here. But if we were just looking at this, obviously not very bullish. We gapped down it's continued down. I guess the one kind of nice thing from a technical standpoint is you are having some big candles here. The rate of descent has declined a little bit. And so that can be a sign of, well, maybe the bleeding is starting to slow down at least on that. So that'd be the good thing on that. The other one here is, I mean, there's others, but that I want to look at here is Tesla. So support level right here on Tesla, earnings right here. Tesla's been spending a lot of money on, robo taxi type stuff. And is that going to translate? What are their actual results going to be? And so we'll see on that. That'd be a support level, but you can see pretty big moves on these. $21.50 market maker move on that. So, so there we go. So that's earnings today. You can go through the others if you like. We did, by the way, have some, that brings up in the chat a good point. Barbara Hicks, appreciate you, mentioned IBM pre-announced. Well, you pre-announce bad news and it goes down. Well, then that steals some of the thunder out of earnings, some of the impact of earnings. So it's still, if you look at the market maker move on that, it's still, significant, but it's not as significant as probably would be because we already know some of the numbers. And it's still not biased to the one side or the other. It's still plus or minus $12 in terms of that. Okay. So there we go. Now let's look at some upgrades and downgrades here on this. Okay. CoreWeave, CRWV, CoreWeave. So here's CoreWeave. CoreWeave was upgraded by Truist. Okay. Well, that's probably good news for them. They've had a nice little rally at this point because, frankly, the stock hasn't been doing very well. They upgraded it to a buy from a hold, but this is kind of interesting though. While they upgraded it to a buy, they also moved down the price target from 131, which was up here, to, what did they say, 126. So not huge. They moved down that price target, but that's still, optimistic compared to what the stock has done. From a technical standpoint, 20-day potential resistance. From a technical standpoint, what we've seen kind of like almost a bear flag type situation. Goes down, flags up, breaks down. Bearish traders would maybe look for a breakdown here as a potential bearish entry. Bullish traders, well, looking above, looking to break here, making this move up. Because right now, if we look at this move up that we've seen is not that dissimilar. This move up here isn't that dissimilar from this move up that we had here, right? Or, we've had other moves up. So what we want to see is something that's different. And first we want to see probably break that. Breaking above this high, okay, this level of a resistance would probably be a very significant step on that for that stock there, okay? So that's CoreWeave right now. Another stock with a upgrade. DigitalOcean, upgrade, nice move up. Kind of similar to CoreWeave in the sense that it was trading down, starting to look up a little bit, looking a little bit better there. And they raised the price target. This is from Stifel. Raised the price target. They're upgraded from buy to buy from hold. Price target to 160, up from 135. So their price target was here. I bet their price target, moving it up there. Let's go and look. But right now, still I think probably resistance right here that you'd be looking to break on that. Now, obviously, everything's not an upgrade. Here's some downgrades. Whew. Well, earnings and downgrade here on this. Citizens downgraded to market perform from outperform without a price target. So, hey, the quote was disappointing Q2 results. That's from Citizens. Well, obviously the market sees the same thing here. Let's move forward because I'm going to run out of time here. Some price target changes, other companies that you may have heard of. Netflix. Netflix has been rallying a little bit here. Baird lowered the firm's price target to $90 from $120. That's a significant reduction. It's still well above where the stock is, but from a technical standpoint, the trend has been lower. Earnings wasn't good. I don't see much technically good about this. You could say, well, it's gone up the last couple of days, but look, when a stock is trending down, it goes up the last couple of days quite often along the path of it going lower. So I'm not saying it can't go higher. I'm saying until you break above resistance, until you break above, say, the moving average, a 20-day. We've hit that 20-day moving average quite a few times here on that and haven't broken above that. Until we see something different, I think a lot of traders would consider that to be a relatively bearish, a bearish signal there. Lower highs, lower lows, we got to see a break of that pattern on that. Let's look at a couple other things. Let's look at another price target. Let me get out of my drawing tool. Okay, we're going to go to SanDisk. We've seen a theme here, haven't we? Lower highs, lower lows, price target change. Wells Fargo raised the firm's price target to, this is expensive stock, $1,620 from $1,250. So, hey, looks like they think the bleeding may be coming near an end. I don't know, but you got to realize these price targets don't mean it's going to be there in the next week or month even. Okay, so, but right now, from a technical standpoint, this is what we're seeing. Got to break that first of all on that. Okay. So let's look at sectors. Let's look at sector performance here. Let me just switch and go over here. And so here's our sectors. Probably not surprising. Oh, by the way, this is today's change, this column right here. Okay, this is today's change. I have it sorted right now by the month change. So this is a month change on here. So here's energy. Well, look, not surprising of what we've seen from a technical standpoint. And realize when we look at this and we say from a technical standpoint, this was kind of the trend line we had here. We broke through it. But when we say from a technical standpoint, so much of it is just driven by news that it could be looking terribly technically, but you get good news, it could totally change, or vice versa. So we're seeing energy driven higher. As we do so, though, just keep in mind, let me just see here real quick. Oh, that's right. Okay. As we look at this, not all energy sectors, not all energy, hold on, sorry about that, are created equal. So for example, whereas you have oil, gas, and refining, so that's what this is. I know you can't tell from my symbol. Oil, gas, and refining market and marketing. Okay, that's a sector. Probably not surprised. I mean, this is like as strong as you can possibly get on a trend there. Oil, gas, and exploration, still nice, not quite as much, quite as not so much. Oil, gas, and equipment services, looking a little bit different there, right? So not all energy is created equal. So if we look at things like healthcare, okay? So here's healthcare. And you can see we had nice, strong performance and, little bit of a reprieve right now in healthcare. But as we look at this, not all healthcare is created equal. You see healthcare distributors looking like that. That's not too bad. Healthcare equipment looks like that. Very different on that. And you can see that across the board on these. And I may have said, Barbara said industry. Yes, so these are sectors here. I'm looking at industries. I may have said sector there. So thank you for correcting me on that, Barbara. So similarly, if we go to IT, well, let's look at IT. So here's IT, the IT sector. Really strong performance for a while and not so hot lately, right? Well, what we've seen is some things have been doing better and some things have not been doing so well. Here's electronic equipment components, really struggling of late. But internet services and infrastructure, looking a little bit different there, right? So software had a tumble, a huge tumble, and it seems to be recovering lately. And let me go, here's my semiconductors. Here's semiconductors, metals, and equipment. You see, opposite. Well, software was going down, semiconductors were going up. Semiconductors have been hit hard lately. By the way, that just brings up another point, and that is, I think it's today, we have earnings on Texas Instruments coming out. So yeah, right there. So we'll see what happens. That right now, we've been kind of in a channel there. So, hey, everybody, we're just about out of time. Let me just mention a couple things here. If you are interested in learning more about the markets, I encourage you to subscribe to the Trader Talks channel. Okay? That's a YouTube channel you're on. We have a variety of webcasts. Let me give you an example of one of those webcasts. We have one called Trading a Smaller Account. Okay? Trading a Smaller Account. Well, that actually occurs twice a week. Okay? Mondays and Fridays, Trading a Smaller Account. Barb Armstrong teaches that webcast. Maybe you don't have a huge account. Maybe you have a $10,000 trading account, something like that. And you're going, well, you see your neighbors and they have a lot more to spend. That's okay. We start somewhere, and no matter where you are, it's important to invest and to be in the markets and to consider this. So make sure you check out that webcast, Trading a Smaller Account. Barb, maybe you could put the link into that webcast there on that. Also, I teach a couple other webcasts throughout the week, including one that's going to occur in just an hour and a half or so, managing your options portfolio. If you're an options trader, we'll talk about options today and managing your options portfolio, as we do every week in that class. I invite you to that. If you liked the webcast today, I encourage you to click on the thumbs up. And in addition to subscribing, that helps me out. That I appreciate that. And I hope you all have a wonderful rest of the day. And thanks for joining me, everybody. See you later. Bye-bye, everybody.